morning, I'm Tim Carter. I'm a Client Portfolio Manager on npower's Optimisation Desk. Welcome to this morning's market update on Tuesday the 5th of January. So markets today opening a little bit firmer. The key drivers for this are, number one, we've seen weather forecasts revised a little bit lower on the balance of the month, particularly from Monday next week, moving below seasonal normal for the first time since November. Number two, systems today, both power and gas, are reasonably well supplied and comfortable fundamentally. Number three, we've seen oil prices trade back below $37 per barrel, while GBP sterling is trading above yesterday, worth 136 against the euro. Those are your key headlines. If you'd like any more information, please contact us on the email address provided. Otherwise, please continue to watch for a bit more detail. So, firstly, looking at those weather forecasts in a bit more detail, for the next week or so, we're still going to be above seasonal normal, but by Monday next week, we'll dip to around 2 degrees below. That's actually been revised slightly warmer than where we were forecast yesterday, but then the balance of the month is where the key bullish sentiment is coming from, with temperatures due to stay a couple of degrees below seasonal normal for the last couple of weeks of January, albeit the reliability of those forecasts is a little weaker. That could push demand in the UK up by around 80 MCM from where we are at the moment, so that's a reasonable shift in fundamentals. Looking at today's gas system though, we've got line pack forecasts of around 7 MCM long, so that's reasonably well supplied. We've seen Rough move their nominations up from 20 MCM to 40 MCM today. We've also seen good flows from Langoled, around 70 MCM, while we've also seen a shift down in the IUK exports, which have come down to just 10 MCM today. On the power side of things, we've got good supply again. Peak margins are just under 11 gigawatts today. Wind generation are around 4 gigawatts at the moment, which might drop off a little bit into the afternoon, but will then pick up again by tomorrow afternoon. Meanwhile, everything else looks fairly similar, with CCGT again dominating the stack with 42%, and the interconnectors are at full import capacity. Finally, looking at the oil and FX markets, as I said, we're seeing Brent trade back below $37 per barrel. It had a bit of a rally yesterday, shifting up around 4% through the early afternoon before erasing all of those gains in the late afternoon. It had initially been risk premium being built into prices because of the Middle Eastern conflict with Iran, but in the afternoon that all got eradicated as the oversupply in the market continued to weigh on sentiment. That comes ahead of US inventory data, which is expected to show inventory stayed around the same level last week. API unofficial data comes out today, and then EIA official data tomorrow. And lastly, GB pound sterling against the euro is a little bit higher than where it was yesterday, bouncing off that key support level at 135, now trading at around 136. That comes despite kind of current forecast for Bank of England interest rate liftoff, shifting back to Q1 17 now. That's it for today. Have a great day, and we'll speak to you again tomorrow.